Okay, so the practical aspects for doing this, we've talked about the framework, when you're eligible, when it applies, but the next important part is okay, the how. That's what we're getting to now. Okay, the syntax, the how. Um, you must notify the ATO within 7 days of the month end. If you're if you're enrolling of your current GST turnover for the reporting month and the projected GST turnover for the following month. So the projected GST turnover is one of those key criteria I spoke about earlier. Okay, it's a concept found in the GST law, and that's why they're using it. It's an existing definition, so there's less ambiguity. There's established case law what projected GST turnover means and looks like. The reporting month is the month in which you are entitled to the JobKeeper payment. And the reporting isn't linked to eligibility. So remember, I said before that we're looking to qualify once and not need to qualify again. That still holds true, but the reporting process on an ongoing basis is for government to measure the cost of this stimulus. Because they want to see, okay, those who may not qualify later, if they're still receiving it, how much are we paying? You do your reporting using the JobKeeper Declaration Report. Okay, that's a form to be downloaded from the tax office. Whilst most will have registered interest, the next important step actually is the enrolment part. So you must commence the payment of $1,500 a fortnight, even before enrollment, because enrollment actually can't occur until next week, which is the 20th. Okay, that's the earliest. And the $1,500 payment will have already gone through one fortnightly cycle by that time. So you need to have commenced. You need to pass your employee the JobKeeper employee nomination notice. Okay. And effectively, the employee completes this and agrees that an employer is paying them, because they can only claim from one employer. This is the important part. So if an FAQ, which we'll go through later, is can you have multiple employers? You can. Okay. So some people who work more than one job may have been employed by more than one employer on 1st of March, but they can only nominate one employer from whom they receive the $1,500 JobKeeper subsidy. That's the important part. Okay, so need to complete this form, return it to you by the 30th of April, and you keep it on file. Okay, as an employer. From the 20th of April, the enrollment process occurs on the business portal. And for the first fortnight, which is the period ended 30th of April, okay, you must have enrolled by the 26th of April. Okay, so you've got that. That's the grace period. After this initial enrollment, every other enrollment period must occur before the end of the relevant fortnight. Okay, so getting top of the enrollment in a timely manner is really important. If you're self-employed and you're looking to obtain this, you need to provide your bank account details during the enrollment process. Okay, and in the first and second fortnights of April, you need to specify the number of employees. Again, this is all part of the enrollment process. Through the business portal, you select which employees are receiving the JobKeeper subsidy, and this is largely through the single touch payroll STP reporting. It'll be done via the software, or if you don't have software through which you report single touch payroll, you'll do it manually through the business portal or through a tax agent. We envisage that a lot of people will require our assistance to do this, so we'll be the ones who'll be helping them through this, through the ATO online services. The employee must be notified, okay? And each month, you must confirm which employees are still receiving it. So if an employee changes or it leaves, then you need to notify as well. Okay, the tax office is keeping an ongoing tab on the employees who are receiving this. Paying employees, you must pay them $1,500 a fortnight. So they work less, like I mentioned before, they get a pay rise. One of the challenges out of this will be some of the people management that you'll need to do. You need to consider, okay, some of my staff are still working, maybe a reduced 4-day week, and they're getting, the 80% pay might still be more than $1,500, but they're working for it. Whereas you might have someone who only works 2 days a week is getting a pay rise for doing the same amount of work. There can be some internal tension that occurs. So for an employer, it's just learning how to manage that. Okay. Your existing pay cycle remains intact, so you don't need to change your pay cycle for this. You just need to make sure you pay 2 fortnights, say you paid a month. Okay, so if you pay monthly, make sure there's 2 fortnights, and if you pay weekly, well, you're going to be ahead. Interestingly, for April, all April payments must be made by the end of April. Okay, so whilst there was talk that the payments commence on 30th of March, and some employers were worried that how am I going to fund this in the meantime? The first month does technically afford you a grace period. You have the whole month of April to the end of it to make good all the payments that you should have made. So this is deliberately designed to provide some grace to employees who are struggling for cash flow, wondering how they'll do it, for banks to react, because whilst it's all good and well for us, the government to say, speak to your bank, our personal experience is banks are also struggling with a number of things. One, working off-site using their systems. Two, the flood of people looking to put holds on loans. And three, those looking to access new credit in the current climate, especially when banks are also wondering, okay, what does this mean for serviceability? So the government has given grace in the first month. End of April you have to make good on all those payments. So in reality, for some employers who are worried about cash flow, you actually might only be a few days, end of April, beginning of May. As long as you've done your enrollment early enough, notifications have been done, you fall within the grace period, you should be okay. Now, what's important is a super guarantee. Now, super guarantee only applies to the amounts that people are working for. That's really important. So if someone works and would have earned more than $1,500 a fortnight, well, what you're paying them is wages, and what you receive is just a subsidy from the government. So the whole amount that you pay them is going to be subject to super guarantee. On the flip side, I keep speaking about this person getting a pay rise. If they only work 2 days a week, and say they're only entitled to $350 a week, okay, but the payment is $750 a week, the $350 you pay super on because they worked for it, but the extra $400 is not subject to super guarantee. It's just a subsidy, okay? So that's the important distinction. And when you're doing this through payroll, most of your payroll providers are probably going to have to introduce a different non-super code in order to calculate payroll. So just be aware of that. Tax consequences. Remember that the JobKeeper subsidy is actually income of the employer. In the same fashion, whatever you pay out to employees is tax deductible. Okay, so it's a nil result. The JobKeeper subsidy is not subject to GST when you receive it. Okay, and PAYG withholding will apply to the payments you make to employees in the normal fashion.